Welcome to Mark Arnold's Finance. Earnings week has started and it's already been off to a big start. 3 of the companies in my portfolio reported earnings today. That's 3M, Johnson & Johnson, and Microsoft. And I'm going to cover them in that order, which is my least favorite to my most favorite. But let's first look at my portfolio performance. We'll see here that I am down 1.3%. I am $623 in the red of unrealized losses. Now this is something I share with every single video, so if you like that type of transparency and you're new to my channel, be sure to subscribe. Now let's focus on Microsoft real quick. They are my biggest holding at 18.88% of my portfolio, and they're in the green 1.56%. Now let's look at Johnson & Johnson. They make up 4.61% of my portfolio, and they're in the green by 10.55%. And then 3M, they make up 3.39% of my portfolio. They're down 22.86%. This has not been a great investment for me, and I do expect to be in the red for quite some time. So speaking of 3M, let's get started with them. They had expected EPS of $2.36, and they had a miss and came in at $2.28. Their expected revenue was $8.04 billion, and they actually beat at $8.8 billion. So what I want to do is provide some highlights from their earnings. Their organic sales grew 0.4%, which is extremely minimal. That's barely a budge. So their sales are slowing. The adjusted free cash flow grew 3% year over year to $1.7 billion. So somewhat of a highlight, but I would like to see this more towards like a 5 to 8% range. They are laying off 2,500 employees. Most companies are starting to do this. Expenses are increasing, and a lot of companies want to improve their margins and their financials, and this is one way of doing it, and 3M is following suit. They expect macroeconomic challenges to persist in 2023, so the outlook that they provided, their forecast was not great. They reduced their EPS outlook from $9.88 that they had now in 2022. For the next year, they expect somewhere between $8.50 to $9, so a decrease. They also reduced their sales growth outlook, and they expect it to come in lower by 2 to 6%. So right now, 3M is expecting less demand for their products. And I think with high inflation, a lot of people will choose to pass on buying 3M products and maybe go for more of a bargain brand, or just put off certain projects or things that typically a consumer would buy 3M for. Also, 3M stated that a lot of companies that buy their products already have high inventories of their products, therefore will probably not be buying as much in 2023. So for 3M, they have litigation issues. They provided a forecast that shows the slowing down of sales. And for me, I think 3M is at an extremely low valuation, but it does come with some risk. So I can see why some investors would want to buy here. They have a very attractive dividend, but I think that this company will stay in the red for me for at least the next couple years. And I don't think this is a good long-term hold. I don't think it's going to outperform the S&P 500 or really perform well at all. I think it'll always be a slow grower, but will provide that higher dividend. For me though, I rather have the opposite because I still have quite a time frame till retirement. So right now, 3M might be an opportunity to buy if you are a dividend and growth investor, but they have been growing their dividend pretty slowly. So I just don't think this is a very strong investment, and I would like to exit my position someday. Next up is Johnson & Johnson. They have expected EPS of $2.22. They beat at $2.35. Their expected revenue was $23.76 billion. They missed at $23.71 billion. So some highlights on Johnson & Johnson. Their organic sales grew 0.9%, so slightly more than 3M, but still dismal. Their pharmaceutical sales came in at $13.16 billion versus the estimate of $13.14 billion, so a slight beat. Their consumer health sales came in at $3.77 billion versus the estimate of $3.73 billion. So this was the area of highest sales growth compared to all their 3 segments. The next one is that medical devices and diagnostics segment, where the sales came in at $6.78 billion versus the $6.97, so they missed there. And it's kind of funny because the last point here is they are going to spin off their consumer health division. The new name will be called Kenvue, which is kind of a weird name for me, but that's okay. I'll get used to it maybe someday. But it's funny how they're spinning that off because they feel pharmaceutical and the med devices will be the higher sales opportunity, the higher revenue opportunity. But right now in this last quarter, the consumer health was the one that had the biggest gain in its sales. But they did point out it is 6th season. So this last quarter generated a lot of money from people buying more of those products. And so going forward, they still feel very strongly about the pharmaceutical and med devices being their areas of growth, which is why they're spinning off that consumer health division. So the US sales slightly missed. They came in at 21.52 billion versus the estimate of 21.63 billion. International sales were a slight beat at 11.19 billion versus the estimate of 11.12 billion. Now they expect high inflation to hurt demand for their products in 2023. So again, they're putting out this kind of warning to investors. And the China COVID outbreak is going to hurt their medical device sales in the first half of 2023 as well. So again, they're kind of putting out there that 2023 will be a difficult year. Their sales will probably slow down. But I think Johnson & Johnson, it is one of only 2 companies that has a higher credit rating than the US government. The other one is Microsoft, so it's kind of funny they both are reporting earnings on the same day. But I think Johnson & Johnson is a solid investment. And I do think over the next decade, they will provide some very good growth because I think they're making a good pivotal decision right now to focus on pharmaceutical and the med devices, which I think has a bright future. Just think about it. You know, our population is growing, people are getting older, our world might not be becoming more healthier, and so there's going to be more dependency on these things, and therefore I do think Johnson & Johnson is making a smart decision, and I will be looking for any opportunities to add to my position in 2023. Lastly, we have Microsoft, my favorite company in my portfolio. It had expected EPS of $2.29, it beat and came in at $2.32. Its expected revenue came in at $52.94 billion. It missed and came in at $52.75 billion. So you'll notice a trend. All these earnings were a mix, whether they beat on one and missed on the other. So some highlights for Microsoft. The revenue grew 2% year over year, which is higher than 3M and Johnson & Johnson, but it still is the slowest rate for Microsoft since 2016. They did take a $1.2 billion charge relating to it, cutting 10,000 jobs. All tech companies are, laying off pretty heavily, but now it's starting to fall off into other companies such as 3M. Their intelligent cloud part of their business came in at $21.5 billion versus the estimate of $21.4 billion, so a slight beat. The very popular Azure cloud and the other cloud services grew 31% versus the estimate of 30%, so a slight beat, but last quarter it grew 35%. So there is a slowdown, but this is still healthy growth, and I am very happy about this. Now, the productivity and business processes segment, which includes Windows 365 and LinkedIn, grew 7% and produced revenue of $17 billion versus the estimate of $16.79 billion. So a beat there. Now, the one negative is their personal computing segment, which is Windows, Xbox, Surface, and search advertising, declined 19% to $14.24 billion versus the estimate of $14.7 billion. So this is a negative for them, but I want to show you this chart here. This shows all the products and services of Microsoft and the growth from fiscal year 2021, the third quarter, to the second quarter of fiscal year 2023. The one thing I want to point out is all of these products and services areas are declining. So let's look at Azure. It went from 50% growth to 51 to 50 to 46 to 46 to 40 to 35 to now 31. And if you go through every single one of these products and services, the growth is declining. So here's the other part of it. So this is showing you that more of that personal computer segment, it's declining massively. So this is why I like Microsoft, though, is even though all of these areas are declining in growth, it's still growing its revenue, even if it's 2%. That shows the power of Microsoft and its pricing and the fact that it has very sticky subscriptions, and it's just a high quality company with great financials. And to kind of counteract all these declines, the CEO said himself, the next major wave of computing is being born as the Microsoft Cloud turns the world's most advanced AI models into a new computing platform. We are committed to helping our customers use our platforms and tools to do more with less today and innovate for the future in the new era of AI. So for Microsoft, it really is about, yes, they're slowing down in all their areas, but they're still growing revenue, which shows their strength. But now they're going into the AI side of things, right? I just did a video on the OpenAI, ChatGPT, kind of integration with Bing and how they're kind of try to take market share away from Google, which Might happen, might not, that's okay, but they're going to integrate it into pretty much all areas of their business. And I really think this is what makes a quality company, is not one that will just be okay with their declining growth and not, innovate or go into new areas. Microsoft is doing that. They're saying we're not happy with that. We are going to find areas of growth, and that's what they're doing. And they're also going after the Activision Blizzard acquisition. Just so much with this company. I really do love it. I think 2023 hopefully will provide some opportunities, because I want to finish my position with Microsoft. I want to have invested $10,000. I'm about $1,500 to $2,000 away from that. So we'll see if I can have that opportunity. I would like to see it drop closer to 200. Might not happen with a company like Microsoft, but regardless, I think this wasn't bad. These earnings, they're just showing the slow growth, which I think we'll see with all companies, but they're still strong. They still have great financials. And so let me know what you thought of 3M, Johnson & Johnson, and Microsoft earnings. Will you be buying any of these companies? They all, I think, present an opportunity for one reason or the other. 3M is super cheap. Johnson & Johnson is very solid, and I think we'll be going towards growth over the next 10 years, higher growth. And Microsoft, I think it's such a solid, high quality company, and what they're doing now with the AI, I think will really pay off in the future for us investors. So I'm very happy having this as my largest position in my portfolio. Let me know if you'll be buying any of these, what your thoughts are. And thank you guys so much for tuning in. We'll see you very soon on Mark Arnold's Finance.